Hello there, and welcome to our quarterly real estate market update here in the Louisville area. The first thing we're going to do is we're going to look at our charts. As always, these are the 20-year long-term trend line charts. We're now actually getting into 21 years, going all the way back to January of 1998 with regards to data that we can extract from the MLS here in the greater Louisville area. The blue trend line in all of these charts is the actual number that we are discussing. So in this case, number of homes sold on a monthly basis. The red dotted trend line shows us the average of that number. In other words, how have things been trending over time. And so to kick things off, let's look at and kind of dissect the number of homes being sold here in the Louisville area on a monthly basis. So the first thing that catches my attention in this second quarter video is a reiteration of what I had suspected in the first quarter of 2019, and that is that for the first time in about a decade, we are indeed starting to see this long-term trend line break down. Okay, in other words, the lows of this market with each passing year have been getting higher until this year. Okay, so for the first time in about a decade, you can see that the low represented here, January 2019, did not increase. In fact, it broke long-term trend line. You can see same thing happened here at the end of the, or beginning rather, of the real estate crisis, financial crisis, 2008, 2009. You can see the same thing happened here. We had lows that were getting higher, and then that trend line broke down for a couple of years straight. Okay, and on the high side, the high water mark, you can see here, of course, it is all we know is information through the first two quarters. We'll see how the summer pans out going through Q3 of 2019, but thus far it looks like the same story is being told in terms of the high water mark of each past year, June, July, August. That is starting to break down as well. Okay, so let's just pause and talk about that for a few minutes here, because I do think it is worthwhile for those of you who maybe don't appreciate what it means when a blip on the radar has occurred, so to speak. In other words, what's the big deal, Ryan? Why is this chart such a big deal? Well, if we take a look at, say, June 2016, okay, there were 1,888 properties that were exchanged in the month of June in 2016, 3 years ago. In June 2019, that number has decreased to 1,695 units being exchanged or transacted in the month of June. 193 houses not being sold times an average sale price of about $245,000 gives us a grand total of $47 million worth of real estate not being exchanged in the month of June. Okay, if we took, if that was an average number, $47 million times 12 months out of a given year means we're talking somewhere in the neighborhood of $500 million worth of real estate in the course of a 12-month period not being exchanged. Okay, allow that to sink in for just a second, because I don't know about you, but where I come from, $500 million is a lot of money. Okay, and let us not forget that when somebody buys or sells a house, other areas of the local economy are impacted. Right? When somebody buys and sells a house, well, there's at least 2 phone calls that more than likely go to the moving company, right? The moving van gets called twice. The buyer's moving their stuff into the house, the seller's moving their stuff out of the house. More than likely, the buyer is going to purchase a can of paint, crack open a can of paint, and freshen up the walls. They might hire a contractor to come in and turn a wrench, fix some stuff, right? All of that stuff all of a sudden now doesn't happen when you have $500 million worth of real estate not being transacted. And we're not talking just in terms of like price tag. We're talking in terms of units being sold. Okay, so that's very significant. So when you see this stuff in these videos, you know, the market is such a slow-moving beast that these conversations don't happen very often, twice in the last 20 years, really. And so when it does happen, it is significant, and it's something we should take notice of, especially those of us who make a living in the real estate industry, because we need to be having conversations with our clients. And at Dream Digs, this is actually what we have been doing recently, having conversations with our clients as to the importance of this stuff. Because if you're thinking about buying or selling a home in the next year or two, you need to know this stuff. Okay, and so we bring it to our clients' attention before we go much further in the sales process with them. Scrolling on down, our average sold price in Louisville is what we're going to talk about next. Okay, so the main culprit for the number of units being sold in the Louisville area decreasing, as we scroll back up, the reason for this breakdown, I think, has everything to do with the fact that the average sale price in Louisville has just been going up and up and up and up. Okay, and so that's a good thing if you're trying to sell a property, but for all the folks who are trying to buy, which is 50% of the marketplace, that has been very restrictive on their actions. You know, you can see here that the average sale price June 2019, a little over $245,000 or $246,000, close to it. If we go back to that same June 2016 number, wasn't too long ago that we were just cracking the door of $200,000, right? So $207,000 was the number in June of 2016. Well, in that same 3-year timeline that we were just talking about a minute ago, the average sold price in Louisville has increased by 15.5%. Again, that number may not sound a lot to you watching this, but if we compare that versus the average U.S. household income over the last 3 years, went and did a little Google research on that, that number comes to 10.5%. So in other words, people's incomes in America on average have only increased by 10.5% over those 3 years, but the average sold price in Louisville has increased by 15.5%. In other words, the average price tag of your average home in Louisville has been increasing more than people's incomes. And if that happens for a number of years in a row, as it has, then something's got to give somewhere, right? In other words, all things being equal, the number of homes that are being sold on a monthly basis has to stop or decrease in comparison to years prior, because people can't afford to buy houses at the same, price tag as they were the year before. So these things do start to add up and make a difference in our local economy, and we are recognizing that through these videos here. Next chart, average continual days on market. Okay, so this blue line represents how long it takes for houses to go under contract once they hit the market. Once a new listing goes live on the MLS, how long does it take before it goes under contract? And you can see that over the last 4, 5, 6 years, homes have been selling more and more and more quickly until we get to the last couple of years. I've noticed that this trend line here is starting to potentially, looks to me like, bottom out. We haven't seen an outright reversal yet like we have in the number of homes being sold, but it is starting to bottom out. And so those two things combined tell me that as a owner of a realty company, I need to make sure that we are having conversations with our clients to let them know of what is likely to be coming around the corner, so that they're not being caught with their pants down like, you know, what happened to a lot of people going into 2008, 2009. Okay, this stuff is real, and we will continue to monitor it going into Q3, Q4, the third and fourth quarter of the year, because if this stuff continues to happen, you know, we need to be more and more vigilant to make sure that the people we're talking to are better prepared to take the respective actions needed, whether they're buying or selling a home. Okay? Two other things that I think are worth talking about in this particular video at this point in time, so as not to raise alarm bells. First, the unemployment rate. We're looking at a graph here of the unemployment rate in the United States over the last 20-some years. And you can see this blue line represents that number. You know, we are at all-time lows in terms of unemployment. Basically, if you can't get a job right now, you aren't trying. And so that, combined with the 30-year mortgage rate, you can see how that has been trending over the last decade or so, where we are at right now versus a decade or so on this trend line. You can see that, you know, historically we are at all-time lows. So when interest rates are low and everybody's got a job, you know, I don't look for some huge real estate crash like we saw in 2008, 2009, 2010. I just think that the average sold price is probably what you're looking at here, this $245,000 mark. It just has got to be getting at or near its peak. Otherwise, you wouldn't be seeing this trend line breaking down right here, and the length of time the properties are sitting on the market starting to stagnate and possibly reverse. We'll see if that happens or not, but we're starting to see it already right here in the winter months. You wouldn't see those two things happening, okay, if there was more room to go on average sold price. So I don't think that, you know, the sum of this video is not to scare folks and say, hey, you need to, you know, stock up on canned goods and ammunition and whiskey. Life will go on in this country, but in terms of trying to make a decision as to whether or not you're going to buy or sell a home in the next year or two, this should be really, really helpful in a way that, you know, the past year or two, you know, things were kind of good or great and getting better all the time, and now for the first time in several years we're starting to see that is not necessarily the case. So I thought it was worth spending a few extra minutes explaining that to those of you who watch this video, and certainly we are having conversations with people in the market about this on a regular basis. So hope that helped. If you have any comments or questions, feel free to reach out at our contact information in the email that was sent along with this video. Thanks for watching.